Some of the recent headlines may have caused weakness in stocks, and the Nasdaq 100 was down 4 straight weeks going into Monday and barely avoided a fifth straight weekly loss. That would have been the worst streak since 2012. The rest of the major indices swung back from midweek losses and ended the week unchanged or marginally lower. Cryptos were clobbered this week thanks to a double whammy of repeated news from China, and Elon Musk didn't help much either. So Bitcoin was battered, Monero was mauled, Ether eviscerated, Doge decimated, Ripple routed, Dash derailed, and Coinbase clobbered. We also had the downside dollar, cratering commodities, crushed copper, greedy gold, and obfuscated oil. I had to look that one up in the dictionary. And although absent from view by the media, keep your eye on the trembling treasuries, particularly the 10-year. We may have another stair step up, but that may be it. We'll have to see here in not too long. But for now, let's keep tracking the Nasdaq through the triple Q proxy. And so back to the triple Qs we are. Back here in late last year, let's draw that bottom line, that trend line moving on up through here. And again, this is a channel, so let's draw the top line through here. That's really not very good at all, but you get the idea. So we're moving within this channel, and I think we're getting the bottoming process here. I think that's pretty clear. This is somewhat similar here. It took a little bit longer. This may come back down. We're sort of tangling with the 20 and the 50 EMA here, so there's a possibility that we could come back down and test that trend line once again. If we test and head up, everything is good to go. But if we go through, we have more time. Now, let's look here into volume. Not going to tell us too much, but I think the MAC will. There's still a little bit of a separation between the fast line there and the slow line here at that point. So there's a possibility of a reflection back down a little bit into early next week, and maybe later next week we head on through. That's only one possibility. The probability, the overwhelming probability, is whether it's early next week, late next week, or the following week. I think we're going to be heading up and through that. We're near that zero line, so we're gathering strength here. Into the histogram, you can see the maximum negativity at that point and improvement for several days. So you have advance notice that we're going to head on through. Now, price rate of change, fast line already went through the slow line and it's resting here. It's still below that zero line, so it's a little bit weak, but it is gathering some strength, and you can see the bottoming and basing there pretty clear. Moving here into the RSI, pretty much the same thing. Maximum negativity, move on up. We're at that midline or 50 line, nice basing and bottom. It wants to head up. And the stochastics tell you the same thing with the fast line moving up and through right here and wanting to head up to that midline or 50. And then lastly, the Williams, nice maximum negativity at that point, nice bottoming and basing, and it's already up above that 50 or midline. So that's telling you too, I'm giving you advance notice that I want to run. Back up here into the price chart. One last look. Now what I want you to do is some homework. Take a look at the daily here and then go to the 2-year weekly and see how all those oscillators are responding. Start getting an idea of how the daily and the weekly move together. That'll give you some headway and give you an edge in the market when we have more downtrends. And for today, that's ChewDog Charts. Thank you.